All right, let's get into this video here. Let me put a mic in. 1 second here. Maybe I gotta clean behind me, a little bit. What is that stuff, anyways? I think it's all backwards. That's weird. All right. So, this is going to be a lesson video. I'm going to try to keep it real quick. I don't even have to go to a chart. This is for like myself, personal video. I might post it. I'm not sure. So one thing that I got to remember and keep in my strategy today, it's 2020, June 19th, Friday, 2020. And my strategy, you have to look at your time frames. Okay. So say that you enter on the 5-minute chart. Okay, well, now that I think about it, that might be wrong. I guess it all depends when your time frames, all of your time frames align when it comes to your trading strategy or your system, your entries for trading. It's important, obviously, to have a stop loss and to make sure that you're not trading with any emotions. No emotions. So trading on a stop loss removes hope. It removes fear. It should remove fear. And over trading, at this point, I've been getting whipsawed, so I don't even want to trade right now. It's like my entry system. So I could be in some serious and some decent profits. If I use the 5-minute charts to enter, you should also use the 5-minute chart to exit. Like, you can't look at the 5-minute chart only and then be like going on the 15 to the hour chart to try to take your exit, because your expectations are going to be out the window. But if you take your profit or your loss on the 5-minute chart, then it becomes relative. Now, if you use all the time frames and you follow the trend pretty nicely, then you should be able to scalp down on some lower time frames to try to get the best entries, because it's the same structure. It should be, and perhaps it's on a Fibonacci. So let's actually open up a chart here, and we have to understand what position sizing and money management is all about, man. So here's VeChain. We got a bunch of junk right here, but guys, what a weird trend line, right? What a weird trend line on both sides here. Let's clear it, because I want to look. This is the 15-minute chart. Okay, let's go to the hour here, just so we can see a little bit clearer what I'm trying to say here. Now, if we just pull up a Fibonacci extension, just as an example, and you say that you wanted to enter on the 61.8 or the 0.9 or whatever it is, then you do that. That's your buy zone. And you can have a stop loss underneath the low. And you're done. So that would be one way to enter the market. But to follow the trend, and here it is right here, the video I wanted to show. Yeah, this is looking decent, not gonna lie. I'd put a stop loss right below that low. I don't think it's gonna go lower than this. Anyways, this is what I'm looking for the trend. I'm thinking that it's going to do this, maybe consolidate in a range and then continue. Yes, the trend is always your friend, but you have to find the right time frame, and you have to be trading on the right time frame, because you can have an amazing stop loss on this time frame because it's so tight if you catch the right trend. So I'm reading Gann, okay? His books are freaking gold, but I'm really trying to understand and put it into perspective on this day in today 2020 in the computerized systems, right? Uh, to be honest, this is looking quite nice, and I've been eyeing this since yesterday for a long opportunity. Now I just read a chapter. He's saying have no bias, don't be a bull, don't be a bear, but follow the trend, trade with the trend, and the trend right now is up. I think on VeChain, and I think it's going to have a continuation here, very strongly. I can take a look at BTC, but guys, what I'm trying to say here is that there's multiple variables that we should be looking for, like for the tightest stop loss, right? So if the prices come down to the 61.8, grab that and make a zone, perhaps of dollar cost average of 3%, where you would dollar cost average down. Now they advise that, but just understand that that would mean that you're a hunter, and that you have a stop loss right here, right below the low. It gives you more control. The only thing that is important is that you have a plan, and that your plan is good. The more hit points that you have, the hit markers, whatever, like right now, the higher your probability is going to be if it all aligns together. Now that's why it's important to look for 3 to 5 um, entry signals and be almost religious about it, right? Like seriously, just take it serious, because it is serious. Look for 3 to 5 entry points. 5 would be like, bro, you're going to probably profit off this trade. And so yeah, Gann is saying that, bro, stay serious about it. And the way you can increase your confidence is knowledge, good experience, successes. So, and knowledge comes from having high hit rates, and like RSI sometimes helps, but I wouldn't just trade off the RSI. It helps. The trend right now is definitely something that I would want a dollar cost average into. Seriously. Let's take a look at BTC, because I'm actually interested in taking a long trade right now. Now we still have a little bit of time to decide what we're gonna do, but if we zoom out here and keep it into perspective, like we're still bullish on the moving averages. So I don't know, last night I thought of this thing right here. So you pull up your Fibonacci, seriously, right? And you don't even have to number it, man. But it becomes your, like, of a trend. Like this is a trend right here. You want to enter on a trend and stop being fucking lazy. Okay? Stop being lazy and look for what the trend is saying. Because if you actually want to make money, it requires you not to be lazy. You have to know yourself, know thyself, and know your weak points and work on your weak points. One of my weak points is that probably I lack responsibility, and that I think many people do. I think we all do, actually, as human beings, a race. But since we've been passed down these genes, but regardless of what I'm saying here, as a trader, as someone that wants to be extremely successful, not only in life, but like as a satisfaction thing as well, happiness. it's important to stay true to some rules, some principles. That's what will keep you. Knowledge, I guess. And what I'm trying to say is that when you actually take the time to study here, not be trading on emotions, bro. Like, if you actually want to make money, you're actually gonna have to trade correctly. You're not here for one shot and then do something else, dude. You're in it for the long game. So act right. And I've been kind of lazy, and that kind of affects, not like, maybe I need to take a walk away from the charts for 2 weeks and come out with a plan, like a very crystal clear plan, and not just chart random shit on the chart, but actually come up with rules that you trade by. Like Fibonacci is a great variable. Elliott waves is another variable, but that one's more subjective and you have to do it by yourself. Just like volume, which I would combine both of them with all of this stuff, right? Moving average, key, that's a key. Time frames, another one, huge point. RSI, and MACD. And realistically, if you want to follow the trends and stuff like that, then you can be like measuring it like this and giving you a better odd. And there's something else that I learned today for money management. If you obviously are in this business not just to chart, have fun and trade, because trading is fun and adventures, if you're actually here to make money, then there's something called, I'm gonna write it right here in this beautiful formula for mathematics. It's called GM, geometric means. And here's actually for in class, marginal cost divided by marginal benefit. It's a way to compound. Okay, it's pretty much a compounding formula, and DCA upwards. Okay, know when to add to the trend, and this is how you will basically be able to get rich, in my opinion. Okay, and then probably this one's know when to exit also, take profit, T1, T2, T3 plus, and to buy back the bounces. And you have to be serious about this as well. That's why studying comes into play. Look, you buy when the RSI is at 45 or 40 zone. That's one. Let's say that the trend's continuing, it's consolidated above a moving average. That's 3 with a nice volume. Elliott counts, let's say that's 4, and a trend line 5. Okay, you have 5 key points right here. You can continue MACD, whatever, but 5 key points. You get in, you start to dollar cost average down or up, whatever, and then you continue to add to the trend depending on what the time frame is. If it's big enough, you can keep adding and adding and adding, and compounding your account geometric growth, and having a very tight stop loss. But if you're right, you're actually measuring the long-term trend, therefore you're obviously going to be adding to it, even if you're using only 61.8% of your account at first, and obviously taking your loss at 61.80% of the account as your position size management. And then finally, when your idea gets confirmed, you add the rest. 382, as an example. You can also dollar cost average 3.33 and have 3 orders of 0.33 if you're not that sure. 0.33, 0.33, 0.33. If it's a bigger stop loss in terms of percentage, let's say it's 5%, then you use 0.33, and then you add it when you get confirmed 0.33, or even 61.8, if that's pleasing to you, whatever you want, and whatever will come. So what's the really important thing is that you have a plan, that you really have a plan of action. Back to this, know when to exit, take profits. Okay. Buy back the bounces. So this right here, an example will be that one example is the RSI gets to 65 or 80 and 90, and it's just overbought. So you can start to take profit there and wait for the market to come back down. And let's say you count 5 waves on the way up, you have multiple confluent reasons to exit your long. So you take profit on, let's say, 0.3 or 30% of your position. Maybe it goes up another 5% or something like that. You take another 0.30%. If it goes down, then you add to that position. And that's what it's important, that the goal is geometric rates of return, geometric growth. Okay, so and the how-to is pretty much by adding, by compound profit. That's how you do it. Okay, now you can do it like Philicon, but I rather do it my way. My way, I believe, would be better because I understand it better, and that's what is important, that you understand your plan. Why do I understand it better? Because for me, adding to a longer term trend makes more sense than a 5-minute trend. Like, you can get in and out like that, but at the end of the day you might get smashed, and smashed hard, bud. You know, you might win 9 trades, compound your account, but on that 10th trade where you're trading with your whole fucking account and you take that 2, 3, 4, 5% loss, you're hit, and your account has hit also. Therefore, it's not geometric growth anymore. The only thing that is geometric growth, if you stick to the rules of that 0.33 and you start adding to your position, that's how you are going to successfully trade larger term trends. That's pretty much all I had to say for this video. And don't just buy like a fucking idiot, or sorry for swearing, but like a fool, just like a fool would do, and buy and hope. Have a stop loss, have a plan in place, and don't trade off of notifications on your phone. Don't trade, like, have a plan. Have a plan. So yeah, developing a plan. And to go further into detail, I think having the plan is the point. What's the point? Like, what are these charts for? Look how many time frames. What are these charts for? So this is the thing. I just look at the chart, and that's not smart at all. Like, you have to build plans and build strategies for these charts, because they're not going to build themselves. I think that's enough for this video. Okay. I also read that when you talk about something, you spend your energy on just talking about a subject. So it's truly important for you, instead of talking about something, to just do it. So know thyself. Know how you're going to master procrastination. and what will help you remember that you are building strategies. It can be small, man, like talking about a little bit every day, building to your strategy. In my mind, I have it. It's done. It's in my mind. I just have to do it. And these trends, they don't come every. Uh, they come only sometimes, or they come with time, I should say. And we're coming to the time where VeChain could be of a trend fairly soon, like I just showed, demonstrated. I'll demonstrate again. So they come once in a blue moon. So don't be spending your money on completely useless trades, guys. I spent $100, $100 on my small account. That's 33, probably 34% of my account on a stupid trade, on an emotional based trade. And if you're gonna do that, either go and play poker, man. Find something else that you can get the same excitement, or trade low leverage, or take $10 and throw it on a 100x leverage account if you want to gamble like that. But this is not about gambling anymore. It's about discipline, and about having discipline in your life.